Think of it and let me know. Right? What is preferable to you? What is better you think is for the economy? Out of the capital means again machines here. Out of the total capital produced in this year, more should be for addition to the capital or should be for replacing capital? It should be addition to the capital so that the production will keep on increasing for the Indian economy. All of you will agree? Any problem so far? Let me know. Any problem so far? Now, why I'm discussing all of this? What is the reason why I'm discussing all of this? What is depreciation? Depreciation simply means the money that the company spends to replace existing capital. The money that the company spends to replace existing fixed capital, by the way. Fixed capital example is machinery. Now, what if I say this year depreciation is very large? Again, I'll write two examples. Think of this. Let's say GDP for the country is 100 crore rupees. Example 1, right? Depreciation here is very large. Let's say 60 crore rupees. And example 2, depreciation here is very small, let's say 10 crore rupees. And nothing else changes. Don't say, sir, what if labor is different? Don't say, what if number of companies are different? Nothing else is changing. Everything else remains the same. Now, please tell me, if GDP of India is 100 crore, depreciation in example 1 is 60 crore and example 2 is 10 crore. Don't you think under example 2, there will be more and more production done in the economy, assuming most of these 100 crore is capital? Think of this. Or let's say all of this 100 crore is machine. Let's assume all of this 100 crore GDP is worth machines. Now, is the logic okay? Depreciation, because it is a smaller amount, means more of these machines, most of this machine which is produced in the GDP, it is addition to the existing capital. Whereas in the first example, most of the machinery is replacing existing capital. That is the precise reason the calculation of depreciation should also be made important. It should be adjusted in the value of GDP. And that is why you have one more indicator. Have a look at this. That is why you have one more indicator, NDP. What is NDP? It represents market price of all the goods and services, final goods and services, of course. It represents the market price of all the final goods and services after accounting for depreciation, after taking out the depreciation. Now, many of you ask me, why? What is the use of this? Please tell me between GDP and NDP. Let me know. Between GDP and NDP, what do you think is a better indicator? Think of it. Between GDP and NDP, what do you think is a better indicator? Better indicator in the sense which will give you more quality data. All of you will agree NDP? Some of you are saying GDP. No, my dear. GDP is not a better quality data. After discussing all of this, you should not have all these kinds of doubts. In GDP, what you get? Market prices of all the goods and services which is produced. Simple. GDP is market price of all the goods and services which is produced in the economy. Whereas, tell me, in case of NDP, will you not be able to find out, I repeat, in case of NDP, will you not be able to find out how much of these final goods and services are used for addition to the capital and how much of these final goods and services you will be using for replacing existing capital? Can you find out or not? Can you come to know about that information using NDP? But can you come to know about that information using GDP? At least think this way. That is the reason between GDP and NDP, NDP is a better indicator. NDP is a better indicator compared to GDP. And some of you are simply typing this in the Google and saying, sir, depreciation means expenditure incurred in the maintenance of the machines. Correct. That is one definition of depreciation. Now you tell me, when you decide market prices, think of this and tell me. Right, again I'll repeat the point here. There are two students who are continuously typing control copy paste the same question. That is depreciation. Google says, in fact they're not using the term Google also, they're saying depreciation means expenditure incurred to maintain a machine. Correct. Now you tell me, if you are manufacturing this remote control, when you arrive at market prices, will you include expenditure incurred on maintenance and repairs of the machine or not? Let me know. Simple argument, by the way. Will you include, right, the when you derive the market prices, will you include whatever expenses you are incurring to maintain a machine? Answer is yes. I am saying exclude all of it. Exclude all of it. Even if you take that definition, exclude all of this. Doesn't matter. Argument is simple here. You want to find out how much of the output is for replacement, how much of the output is for, right, addition. And that information you'll only come to know when you look at NDP value, not GDP value. Any problem? Can we go forward at least now? Any problem? Please do let me know. How should we know what is total depreciation? Why do you want to know? Government will tell you all of this data. And when I took a break, I was just checking some of your comments. Some of you have unnecessary questions. Sir, if a foreigner is right working outside India, how will government of India come to know what is their income? Sorry, if an Indian is working outside India, how will government of India come to know what is their income? My dear, when you work in USA for 3 months, come back to India, will you bring your money back or will you keep it there itself? Tell me. Will you keep your money there itself or bring it back? You'll have to bring it back. Some of will say, no sir, I will keep the money there itself. Assume you are correct. Now tell me, when you file income taxes, will you disclose the income or not? Let me know. Right, those people have these kind of questions. So let me know, when you file your income taxes, will you disclose all of this information or not? Right, of course, yes. That is the reason. Don't complicate all of this. Please do not complicate it. Right? It's a very simple concept. Do not complicate it. Government has all the means at its own disposal to find out how much money you're earning, how much you're bringing back. Every data they can collect. Okay. Now there is one more question. Why GDP is so popular? I'll come to that. Don't worry. Right. Let's assume. I'm giving you one more calculation here. And let's assume there are only two companies, A and B. Okay. Let's assume there are only two companies, A and B. Company A will produce a machine, sell it to company B. Simple. Company A will produce a machine, sell it to company B. The machine value is 1000 rupee, and company B will produce some more goods, sell it in the market at, let's say, 2000 rupees. What is the GDP value here? What is the GDP value? Right, GDP value is basically 1000 rupee value of the machine, 2000 rupee the goods. Arey Baba, some of you are saying 2000 rupees is the GDP. Calculate correctly. Calculate correctly. Right, 1000 rupees the machine value, 2000 rupees is the, right, the products which are manufactured by company B and sold in the market. GDP value will be 3000. Any problem here? Those who are saying 2000 rupees, any problem? Right, the market price of final goods and services produced here is 3000 rupees. Right, so now NDP will be how much? NDP will be 3000 GDP minus a depreciation 1000 rupee, because 1000 rupee is the depreciation here. So NDP will be 2000. Okay. Right, so this is generally how it is calculated. Please go through this. Next one, net national product, NNP. Sorry, enough with GDP. Have patience. Two more concepts are there. Then GDP will be done. Right? Then GDP will be over. Don't worry. Next one is a NNP, net national product. What is this net national product? Please understand the logic here. NNP means it is the market prices of all the final goods and services which are produced by residents of India or nationals of India after adjusting for depreciation. I'll repeat it. Right? What is NNP? NNP is basically net national product. Net national product is the market price of all the final goods and services which are produced by nationals, right? Nationals of a particular country after adjusting for depreciation. After adjusting for depreciation. Now, some of you are saying, what is depreciation? I'll repeat it again. Understand this. I'll repeat it again. What is depreciation? Depreciation is the money spent by companies to replace existing fixed capital. Now, please revise. You people do not revise. That's the reason you have doubt. What is a fixed capital? Let me know. What is a fixed capital? Did we not discuss? Did we not discuss what is a fixed capital yesterday? Let me know. Did we not discuss what is a fixed capital yesterday? Machinery, right? Manufacturing facility, right? Buildings, etc. These are fixed capital. So company, how much money they will spend to replace a fixed capital, that is called as depreciation. Now I'm saying, when you calculate GDP, right, GDP will include all these expenditures. Is it okay? When you calculate GDP, GDP will include all these expenditures. That is, how much money you have paid to purchase machinery, how much money you have paid to set up a new building by destroying old building, etc., etc. But understand this, part of this GDP is a new capital. Part of this, GDP is a new capital which will replace old capital, and part of this GDP is the capital which is addition to the existing capital. That information you will not be able to know using GDP number. And that is the reason what we do is we'll introduce a new aggregate called as NDP. What do we do in NDP? In NDP, we take GDP, and from GDP, we'll subtract depreciation number. And please tell me, if you subtract the depreciation number from, the GDP, can I simply say whatever is left out in the GDP number after depreciation, whatever is left out in the GDP, it is basically representing all the goods and services which are either for consumption in the consumers, for the consumers, or else it will represent capital which is addition to the existing capital. Yes or no? Please do let me know. If you take a depreciation from GDP number, what is left out in the GDP? Either you will have final goods and services which are consumed by all of us, plus you will have capital, that is machineries, which are addition to the existing capital. That's a basic idea. That's a basic idea. And why this is important? Right? I told you, if depreciation is very large, if depreciation keeps on happening to a very large extent, it simply means most of the goods and services that you're producing, you're using it for replacement, not for addition. Not for addition. I hope you understand the logic behind it. Okay. Now, let me go to NNP now. Let me go to NNP, net national product. What is net national product? Net national product represents market prices of all the goods and services which are produced by nationals or the residents of a country after accounting for depreciation. After accounting for depreciation. Now, what do you mean by this? Let's start from GDP here. You have GDP. Can you derive NNP using GDP? Can you go to NNP using GDP? Of course, yes. How? To the GDP, we will adjust this with NFIA, net factor income from abroad. What you will get? You will get gross national product. Any problem? You will get gross national product. From the gross national product, you will take out depreciation. You will get net national product. Any difficulty? Please do let me know. In the formula, any difficulty? You have GDP. From the GDP, you will move to GNP. From the GNP, you will move to NNP. But please understand the importance of this. Understand the importance. All of you will by heart the formula, I know that. Understand the importance. What is the importance of this? Please tell me, between GNP and NNP, which is a better indicator? Think of it and tell me. Between GNP and NNP, which is a better indicator? Don't you think NNP is a better indicator? Again, some of you are saying GNP. After discussing all of this, you should not answer like this. NNP is a better indicator, my dear. How? How so? Let's say some of the Indian companies will produce goods and services. Whether they are in India or outside India, doesn't matter. They'll produce goods and services. But don't you think some of these goods will be again used for replacing existing capital? Correct or not? Some of these goods which are produced by Indian companies, let's say machineries, will be used for replacing existing capital again by Indian companies. Does it make sense to you or not? Let's assume a simple example here. Tata Company. Tata Company, is it an Indian company? Yes. Imagine Tata Company will produce a machine. This will be purchased by Reliance Company. This will be purchased by Reliance Company to produce goods and services and sell it in the market. Now, when I say GNP, will I count all these values? Think of it. When I calculate GNP, gross national product, will I count all of these values? Answer is yes, GNP. But what is GNP? GNP, gross national product. Both are Indian companies. When both are Indian companies, will I count the value of final goods and services produced by both of these companies? Answer is yes. Right? Please focus on the class discussion. Okay. But one of this product that is machine was purchased by another company for replacing old machine. For replacing old machine. Right? So now you will deduct this value from the GNP, that will give you NNP. That's the basic idea. So NNP is a much better indicator compared to gross national product. Any problem here? Can we go forward? Any problem? Please do let me know. Can we go forward? Please repeat the second point. Accounting for depreciation. Arey Baba, same formula. Accounting means you are basically removing depreciation from the GNP value. That is given in the second point. I don't understand. Okay. Okay, so these are certain important points regarding NNP. Now let me ask you a very simple question. I'll come back to this. I'll write indicators now. GDP, GNP, NDP and NNP. Please tell me, out of all these indicators, which is the most efficient indicator, most qualitative indicator? Quality. I'm not talking about quantity here. Most quality indicator. All of you will agree? NNP. Anybody has a problem? NNP. Why? Argument is simple. In NNP, we are removing depreciation. We are not focused on all the goods and services. We are removing depreciation. So that is better. Second one is, understand this. We are focused only on production done by nationals of India. We are focused on production done by nationals of India. Right? So don't you think NNP is a better indicator? We are worried only around the production done by Indians, Indian companies, right? Indian citizens, etc., etc. Even if you have doubt now, please tell me, if GDP of India is 100 crore rupees, and let's say, right, NNP of India is, let's say, 10 crore rupees, do you think India is doing very well? Let me know. If GDP of India is, let's say, 100 crore rupees and NNP is 10 crore rupees, do you think India is doing very well? Looking only at GDP numbers, will you jump up in joy and say, yes, India's GDP value is 100 crore rupees? What if out of 100 crore rupees, most of it is produced by foreign companies? Most of the income is earned by foreign nationals. Don't you think all of that information is masked, is hidden in GDP number? Let me know. What if GDP value is 100 crore and I'm saying most of the profit in this 100 crore is by foreign companies? Most of the income is earned by foreign nationals, foreign citizens who are working for 8 months, 6 months, etc. Don't you think all of this information is hidden in GDP? You will not be able to come to know that. Whereas if you look at NNP, definitely yes, you will come to know what is India's productivity. Right? How much is production done by Indian companies? How much is production done by us, citizens, etc. That is the reason NNP is a better indicator. Point number 2, NNP at market cost, NNP at factor cost. Tell me between both of them which is a better indicator. Think of it. Right, between NNP at market cost and NNP at factor cost, which is a better indicator? NNP at factor cost is a better indicator, not at market cost. Some of you are saying market cost. No. Let me know. 100 rupees the value of the product plus tax of 20 rupee, 120 rupee market price. 110 rupee is the factor cost of the product, 10 rupee is the tax, 120 rupee is the market price. Now don't you think second example, in the second example, productivity of India is better? Let me know. Look at the example and please tell me. In these two examples, where do you think India's productivity is better? Where the value of the good... Array, my goodness. It should be very straightforward to you people. How? My dear, market prices are affected by taxes or not? Market prices are affected by taxes, yes or no? Tell me that. If the market price of the good is, let's say 150 rupees and the taxes is 10 rupee. Market price is 150 rupees, tax is 50 rupees. You are calculating GDP using market prices. Is the logic okay? You are calculating GDP using market prices. But if the market price is 150 because of 50 rupee tax, do you think India's economic productivity is better? Apply common sense, no? Apply logic behind all of this. And it's not that we are introducing market price for the first time. I'm not discussing market price for the first time to you people. We have been discussing this since yesterday, since the day for yesterday as well. So taxes, if they're higher, market prices will automatically increase. GDP will also increase. Would you prefer that? Think of it. Taxes imposed by the government will increase, market price will increase, GDP will also increase. But on the other hand, what if I say the value of the product, tax will remain same. Value of the product increases, market price increases, GDP increases. Don't you think the second one example that I gave orally now is better compared to the first one? Can we go forward at least now? Can I say, right, NNP calculation at factor cost is a better indicator compared to NNP at market prices? Right, so this is the logic. Books will not tell you all of this. Trust me, books will not tell you all of this. Please be very, very careful. That is the reason, have a look at this. We will also calculate NNP at factor cost. NNP at factor cost. How do I calculate NNP at factor cost? Right, this is the formula to, right, calculate. We have NNP at factor cost plus indirect taxes minus subsidies is equal to NNP at market prices. Transfer these indirect taxes and subsidies to the other side. You will have NNP at factor cost. That is NNP at market prices minus indirect taxes plus subsidies. And that is the reason NNP is referred as a purest form of income. Purest form of income. Income. Right? Why? You're accounting for taxation. Accounting means you're removing the impact of taxation. You are removing the impact of subsidies. You are calculating only for Indian nationals. You are removing even depreciation. Hence, this is called as a purest form of income. Purest form of income of a country. Done? this is the end of a GDP discussion for you people. This is the end of GDP for all of you. Any problem? Explain the formula. My dear, how do you calculate GDP? And you people keep on forgetting what we have discussed earlier. That's the reason you feel everything is new. How do you calculate GDP? Do you remember this? GDP is nothing but, right, the factor cost plus taxation minus subsidies. Correct or not? GDP at market prices, factor cost plus taxes minus subsidies. You will arrive at market prices. You will arrive at market prices. Now, rather than using this formula for GDP, I will use the same formula for NNP. Does it change? Please let me know. Does anything change? Nothing changes. I'll simply write NNP at factor cost plus taxes minus subsidies is equal to NNP at market prices. NNP at market prices. Now apply. Right, people are very weak in CSAT. I know you know whom I'm talking about. Some of you are very weak in CSAT. Very weak in CSAT. Why? Some of you say, sir, it is plus taxes, but in the second formula, you have written it as minus taxes. Wrong. My dear, please apply basic concepts in CSAT. If you take this plus tax, transfer it on the other side, what will happen to the symbol? Let me know what will happen to the symbol. Right, NNP at a factor cost, right, is equal to NNP at, right, NNP at market prices minus a tax. Transfer this on this side, it will become plus a subsidies. Plus a subsidies. Is the formula okay with all of you? Some of you saying, let's go to basic prices, etc. Not required. We can do all of this. We can do all of that. Not required. You know how the formula will work. What is the point in using the same formula, right? Elaborated way. Doesn't matter. This is the simplest way. Done? Any problem with this? Any problem? Can we go forward? Okay, so this is the basic idea of GDP. Now, GDP, NNP, etc. Now, before I go forward, many of you are asking, why do we use GDP then? Why do we use GDP? Why not NNP at factor cost? In fact, please understand, we use all of them, but focus is always on GDP. I repeat, we use all of them, but the focus is always on GDP. The reason being, it is, understand this, it is a fact that for some of the countries, net factor income from abroad will be positive and net factor income from abroad will be negative for some of the countries. All of you will agree? Let me know. Right? Net factor income from abroad can be positive also, can be negative also. Now, for a country such as India, NFIA becomes negative. I hope you understand. Rather than plus NFIA, for India will become minus NFIA, which means we will end up having a GNP value which is lesser than the GDP value. Right? So that's a problem for us. And if that continues, right, NNP value will also be much lower compared to GDP value. That is point number one. Point number two is taxes will vary from one country to another country. The taxes, depreciation will vary from one country to another country. It will vary. And if you look at the calculation, if you look at the formulas, don't you think you will keep on removing depreciation from GDP? You will keep on removing taxes from the GDP. As a result of this, NNP numbers will be vastly different from what is the GDP number. And that is the precise reason across the globe, generally we follow the concept of GDP itself. It's not just India's fascination with GDP. If you are reading newspapers, China also focuses on GDP. Right? USA also focuses on GDP. So across the globe, the fascination is only around GDP. But then is NNP useful? Of course, yes. NNP is also very useful for us. For example, if my question to you people will be, what indicator would you use to find out how Indians are doing? Let me know. What indicator would you use to find out how Indians are doing? I'm not talking about India. I'm talking about Indians. What would be your indicator to find out how Indians are doing? That is Indian companies, Indian citizens, etc., etc. Your indicator will be NNP. Is the logic okay? Your indicator will be NNP, and using NNP itself, right, we will calculate one more indicator by the name of per capita income. Have a look at this. There is one more indicator using NNP itself. Using GDP also will calculate this. Using NNP also will calculate this. The other indicator that we calculate is a per capita income. What is a per capita income? Per capita income is calculated by using the formula national income divided by total population of the country. National income divided by total population. And tomorrow, I don't think so the table is there. Tomorrow, I'll show you one table. Don't by heart the table. Tomorrow, please remind me. I will show you two tables. One, right, how does government actually publish GDP for production method as well as expenditure method? I'll show you the table. And as well, using all of this data, GDP, NNP, how they will use those numbers and how they will calculate per capita income. Tomorrow, please remind me, I'll show you both of the data. I generally don't put it in the slides because students will feel that they will have to by heart the table. That is not needed. I'll show you the table tomorrow, please don't worry. Now, what is the per capita income? Per capita income represents what is the average income. Per capita means per person. Remember this, per individual. So, per capita is the average income or earning done per person in India. Right? The formula is very simple. National income divided by the population. Whatever is the national income divided by population, you will get the per capita income. As per the latest data published by Government of India. I repeat, as per the latest data published by Government of India, the per capita income of India is 1.72 lakh rupees. But please understand, no doubt per capita income represents how much is the per person earning in India. There are certain problems or shortages with this number. What are the shortages? Point number one, it is simply an average. It is simply an average, right? What do you mean by an average? Understand how per capita income is calculated. Imagine A is earning 10 rupee, B is earning, right, let's say 100 rupee, C is earning, right, let's say 1090 rupees. Is it okay? I'll just give you some calculations here. Don't by heart it. A is earning 10 rupee, B is earning 100 rupee, and C is earning 1090 rupee. What is the total income earned by the population here? What is the total income earned? 1200 rupees. But if you calculate per capita income, it is 1200 rupees divided by 3, which will give you 400 rupees. Now, please tell me, don't you think there is a huge income inequality which is not represented in the per capita income? Let me know. Right? Don't you think there is a huge income inequality which is present in the economy, but it is not given in the per capita income? In fact, please tell me now, is it even given in GDP? Let me know. Is the income inequality which is present, is it given even in GDP? Of course, no, it is not represented even in GDP. Right? So argument is simple. These kind of factors, right, are not present. This kind of information you will not be able to find out in the GDP numbers or NNP numbers or per capita income numbers. But then why are we using per capita income? What is the use of it? Please tell me, if the per capita income increases, does it not represent that national income is increasing? Let me know. If the per capita income keeps on increasing, does it not mean that? Does it not mean that national income is increasing? Unable to understand anything. My goodness. What is the formula for per capita income? What is the formula? National income divided by population. Now, my statement is per capita income increases. What does it mean? What does it mean? does it not indicate that national income is increasing? And don't you want national income of India to increase? Let me know. Don't you want a national income of India to increase? Of course, yes. Please focus on the discussion, my dear. Right? There are 2 or 3 students who continuously keep on saying they are not able to understand. Right? The reasons are very simple. You are not focusing. You are not revising. If you're not focused, if you're not revised, everything is new for you. Everything is difficult for you. Right? Now, sir, can it happen because of decrease in the population? Tell me. India's population, has it decreased? Let me know. Those people who are asking, right, sir, population might decrease. Because of that, right, the per capita income will increase. Tell me, in the last 1 decade, has India's population increased or decreased? Of course, it has increased. Right, you generally not find a rise in the per capita income because of decrease in population. What you should focus, increase in national income. Increase the national income. Right, that should be your focus. But please understand, there are certain problems even with per capita income. That is basically, it doesn't reflect what is wealth inequality. It doesn't reflect what is right, the income inequality present in the economy. Second, information about various sectoral contributions. I'll give you a data. Have a look at this. Right, India's per capita income per annum per year is 1.72 lakh rupees. Can you tell me? Can you please tell me how much is the contribution from agriculture sector here? Let me know. Can you tell me how much is the contribution from industrial sector? How much is the contribution from the services sector? From this data, can you find it out? Of course, no. You will not be able to find out from this data. Standard of living is affected by government expenditure. Standard of living. Why? Let me give you one statement. Follow this. One statement. Per capita income increases. It also means overall standard of living, quality of living in India is increasing. I'll repeat the statement. Right? The per capita income of India increases. Can I say that overall standard of living, overall standard, not talking about only 1%, 2 people, poor people, no, overall, talk about overall standard of living, right? Will it increase or not? My dear, answer is yes. Overall, it will increase. Abba, Are Baba, overall, I'm talking about overall. And why don't you listen to my statement correctly? I'm not talking about poor people specifically here. I'm not talking about middle income household. I'm talking about overall. Can you understand the term overall? For the whole Indian economy. Right? So if the per capita income, what if I say per capita income of India was 10,000 rupees, right, in 1970, and now it has become 1.72 lakh rupees per annum. Please tell me, if I say per capita income has increased from this number to this number, does it not mean that overall standard of living or quality of living has improved? Again, please understand the statement. My focus is overall. I'm not talking about specifically certain people. Right? Overall, has it improved? Answer is yes. But please understand the next concern here. The standard of living, it is also affected by government expenditure, not just through per capita income. The per capita income, yes, it represents a standard of living, but the government expenditure will also influence a standard of living. Sir, what do you mean by this? Let me explain. Let me give a very simple example. Imagine there is person A, B, I'll take the same example. Imagine there are 3 people, A, B, and C. A is earning 10 rupee, B is earning 100 rupee, C is earning 1090 rupee. Now, please tell me, what is the standard of living of A? Don't you think it will be affected by government expenditure in the form of education? Tell me, because government will provide education, will it have an impact on standard of living of A? What if government will provide free health care here? What if government will provide free healthcare, free food grains? At least now the point is clear to you. Per capita income represents the overall standard of living of the economy. But the standard of living is also affected by government expenditure as well. Okay. Now, some of you are concerned about inflation. Others, don't worry. Tomorrow, I'll prove the point. Inflation is also a point. Inflation will also be considered here. Have patience. The per capita income does not provide a true picture about purchasing power of individuals. It does not provide a true picture of purchasing power of individuals. Now, what do you mean by purchasing power here? Now, there is a concept called as purchasing power parity. There is a concept called as purchasing power parity. We have not discussed that. We will not discuss it today. Right? Trust me, we'll discuss it later, right? Under the concept of exchange rate. There is this argument of purchasing power parity, meaning what? If you have a per capita income of 1.72 lakh rupees, I repeat, if you have a per capita income of 1.72 lakh rupees, right? Who is better? USA's or USA citizens purchasing power is better, or Indian citizens purchasing power is better? Can you tell me based on only this number? Let me know. Right? In fact, understand this. There is one theory: exchange rate, nominal exchange rate, purchasing power parity theory, etc. Can you simply say based on only this per capita income, right, whether India's Indian citizens purchasing power is better or USA citizens purchasing power is better? You cannot come to a conclusion. Don't come to a conclusion. Why? You do not know what is the cost of goods and services in USA. You do not know what is the cost of goods and services in India. I hope you understand the point here. Let me know. I hope you understand the point. Right? What do you mean by this, sir? Let me give a very simple example. Tell me whether this makes sense to you or not. Imagine I'll say that India's per capita income is 1.72 lakh rupees. USA's is $10,000. USA's is $10,000. Can you make a comparison and say whose purchasing power is better directly like this? No, you cannot say that. Don't make a conclusion based on this only. Why? The standard or the quality depends on what is the price of goods and services in both the countries. For example, imagine this remote control. I'll take a simple example. Imagine this remote control will cost $1 in USA and will cost 1 lakh rupees in India. Please tell me whose purchasing power is better? Is the logic okay? Right? Whose purchasing power is better? Based on this, can I say USA's purchasing power is better? Right? That is the reason. Have patience. We'll discuss one more theory. There is a theory called as purchasing power parity. We'll discuss that under exchange rate. Again, we will revisit. When I'm discussing, again, we will revisit how purchasing power parity will have an influence on purchasing power of consumers in different countries. Then you can make a conclusion. Indians purchasing power is better or USA's purchasing power is better. You can make a conclusion then. Done. So these are certain the table is there here only. Right? I thought I have not given it. The table is there here itself. Please have a look at it. Now, what is the table? Many of you look at the table, right? Find it very difficult to understand. Point number one, do not by heart anything from the table. Is the logic okay? Please do not by heart anything from the table. Now, what you need to simply focus on these parameters. Please look at per capita GDP of India. Per capita GDP data is given. Per capita GNI, gross national income, right? Gross national income. We say gross national product, they say gross national income. Per capita net national income is given. Now, please focus on these three indicators. Do not worry about others. Do not worry about others. Right? GNDI, gross national disposable income, right? The private final consumption expenditure, all of that is not relevant to you. Please do not focus on that. Now, can you see the numbers here? How they calculate? Let me know. Can you see the numbers here? And I've told you, right, one data earlier. I've told you one point of data earlier. I said, as per the latest data given by the government, as per the latest data given by the government, per capita income of India is 1.72 lakh rupees. Which means, what are they using here? What is the data they are referring to here? Right? Is it okay if I say net national income? That is a net national production. Let me know. Net national production, NNP, net national production. Again, if you're not understanding it, leave it. Is it relevant for UPSC? Absolutely not relevant. You do not have to by heart anything from here. NNP, they are focused on NNP. That is the point I'm trying to make. Just make observations. The PPT will be given to you. Make observations. Do not by heart anything from the table. Useless. You will take, right, let's say 10 days or 15 days to by heart all of these numbers. UPSC is not going to ask you anything out of this. Done? So just make observations, right? More than sufficient, not required. Okay, by hearting is not required. Now let me go to the next concept. Idea of a virtuous and a vicious cycle, and the concept of the pro and counter cyclical policy. Let's start. What is a virtuous? What is a vicious? Look at the definition first. I will give you explanation after that. What is virtuous cycle? There are various factors which will keep on reinforcing themselves. Reinforcing means having impact, affecting each other, which will lead to positive outcomes in the economy, such as a higher employment, increased productivity, higher growth, etc. What is a vicious cycle? Various factors that will keep on reinforcing themselves to lead to a negative outcome, such as a higher unemployment rate, reduced productivity, lower growth rate, etc. Now you'll ask me, what is the meaning of this? Let me show a picture to you. Let me show a very simple picture to you. The government of India, couple of years ago, imposed a lockdown. All of you remember that? 2020. Government of India imposed a lockdown in the Indian economy. Any problem with the term lockdown? Lockdown, yes or not? Right? Did you people experience a lockdown imposed by government of India a couple of years ago? Now, please tell me, when the government imposes a lockdown, you are not allowed to go outside. You are not allowed to travel. Right? You are not allowed to go for shopping. What will happen to the demand? Demand in the market will go down. Correct? Demand in the market will go down. Now, if the demand in the market for goods and services will go down, what will happen to production? Production of goods and services will also go down. When the production will go down, don't you think companies will remove employees from the company? Let me know. Does it make sense to you? If you are not able to produce more goods, will you hire more people? Will you keep same number of employees? No, you will remove some of the people. So unemployment will go up. And when the unemployment goes up, what will happen to the earnings of the people? What will happen to earnings of the people? Earnings of the houses will also go down. And when earnings will go down, what will happen to the demand? Demand in the market will again decrease. Now, please tell me, will this cycle keep on happening again and again or not? Is it okay? Will this cycle keep on reinforcing itself like this? Yes or no? And what is the outcome because of this? This is a vicious cycle. What is the outcome because of this? Outcome is unemployment rate will increase. Correct or not? Unemployment rate will increase. Demand will decrease. Production will decrease. Investment will decrease. Do you prefer all of these outcomes? Are these good outcomes for Indian economy? Answer is no. All these are negative outcomes. You should not prefer them. This is basically a vicious cycle of growth. Vicious cycle of growth. What about virtuous cycle of the growth? What about virtuous cycle of the growth? Imagine government will invest in the economy. Either government will invest or private sector will invest. So imagine investment will happen in the economy. Now, when the investment will happen in the economy, right? Imagine private sector will invest. Is it okay if I say employment is generated? Let me know. Is it okay if I say employment is generated? If you're going to invest and set up a manufacturing facility, automatically you will demand more employees. Now, when the employment increases, what will happen to the salaries or wages earned by the houses? Salaries will also go up. So the demand for goods and services will go up. Production will increase. More people will get jobs. Unemployment will go down. And when more people will get the jobs, again the salaries earned by the people will increase. That will lead to again higher demand in the market. Now, what is happening in this? There is a cycle wherein the factors will keep on affecting each other. The factors will keep on affecting each other. As a result of this, the economy will experience positive outcomes. More employment generation, more incomes, more production, more demand for goods and services. That is a virtuous cycle of growth. Any problem here? Any problem? Please do let me know. One is a vicious cycle and the other one is a virtuous cycle of growth. Now, please understand the next point. Using these concepts, we will discuss one more very important concept. That is the idea of a pro-cyclical and counter-cyclical policy. Idea of pro-cyclical and counter-cyclical policies. Now, what do you mean by pro-cyclical and counter-cyclical policies? Let me start with the basic idea here. We come across a concept called as a business cycle. We come across a concept called as business cycle, right? What do you mean by business cycle? Now, this is a very important note to you. Have you come across the term business cycle earlier? Let me see how many of you are actually revising, right? Have you come across the concept of business cycle earlier? Those who are saying no, you are not revising. Yes, you have come across the term earlier when I discussed the demerits of capitalism. When I discussed the demerits of capitalism, please go through that. Now I'll explain what is a business cycle. Now let me ask you a very simple question. You are owner of a private sector company. You are the owner of private sector company. Please tell me, will you invest the money? Will you invest money and produce more and more when the demand is more in the economy, or when the demand is very less in economy? Let me know. If you're a private sector company, will you invest more, produce more when the demand is more or when the demand is lesser? All of you will agree to the first point here? Agreed. There should not be any confusion, because private sector is focused on profits. Simple idea. If you ask me, sir, why? Profits. Where will you earn more profit? When the demand is very high in the economy. And what if the demand is very less in the economy? Let me know. When the demand is very less in the economy and it is continuously decreasing, will you invest more money? Will you create more employment? Right? Will you produce more goods and services? Absolutely no. Absolutely no. You will not do this. This is point number one. Please remember this. Point number two. What is the point number two? There is a phase in the economy which is called as recession. Every economy, right? Understand this. Every economy, the GDP will always not keep on increasing. I'll repeat the statement. Any economy for that matter, the GDP of this country will always not keep on increasing. At certain point of time, GDP will keep on increasing, right? I'm showing a sine wave like this. I hope you understand. I'm basically representing a sine wave. If you look at this as a GDP number, if the sine wave is a GDP number, what generally happens for economies is, for certain years, GDP will keep on increasing. For certain years, GDP will decrease. Again, for certain years, GDP will increase. Any problem in understanding this? And many will ask, sir, why will the GDP decrease? My dear, you please tell me, what do you think happened to the Indian economy in 20 and 21? Think of this and answer to my question. What do you think has happened to the Indian economy in 20 and 21? How many of you will say, sir, GDP of India increased during 20 and 21? No. Right? 20, 21, 21, 22. What has happened? Because of pandemic. What has happened? GDP has gone down. GDP value has gone down. All of you will agree? So that is the point I'm trying to make here. GDP of a country will increase for certain years, again will fall down. Increased, fall down, increase, fall down. This is called as a business or economic cycle. Right? This is called as a business or economic cycle. And whenever GDP of a country increases, we'll call this as expansion. Is it okay? Whenever the GDP of a country increases, we'll call this as expansion. Right? Let me give you the example here. After this, we'll stop the discussion. Don't worry. Right? Let's say GDP of India is 100 crore rupees. Next year, it will become 120 crore rupees. Can I say India's GDP has expanded? Please do let me know. India's GDP has expanded, yes or no? Growth rate is very high, right? And now tell me, can you always experience expansion like this only? Can you always experience it? No, you cannot experience it. There will be certain factors which will simply drag you down, right? Which will pull your economy down, right? Example, pandemic. Best example is pandemic right in front of you. Now there is a technical term, recession. What do you mean by recession? Please remember this. Whenever GDP growth rate is negative for 2 consecutive quarters. I will repeat the statement. Whenever GDP growth rate is a negative for 2 consecutive quarters. What do you mean by GDP growth rate? Let's imagine the GDP is 100 crore. It will increase to 120 crore. Can I say the growth rate is 20% here? Let me know. Right? If the GDP is 100 crore, if it is increased to 120 crore, can I say GDP growth rate is 20%? Can there be a negative GDP growth rate? Let me know. Can there be a negative GDP growth rate? Question number 1, think. Can there be a negative GDP growth rate? Answer is yes. Question number 2, can there be a negative GDP? Question number 2, answer to the question number 2, can there be a negative GDP? You will not have negative GDP. Right? There is no maybe, no my dear. What do you mean by negative GDP? Does it make sense to you? What do you mean by negative GDP? The market prices of goods and services is negative. How? Right? But that there can be a negative GDP growth rate. For example, right, 100 crore rupees, the value of goods and services will fall down to 80 crore rupees. Can this happen? Let me know. From 100 crore rupees, the GDP value will fall down to 80 crore rupees. Can this happen? Of course, yes. Right. In this case, the negative growth rate is 20%. But you will not have negative GDP. Negative GDP doesn't exist. The market prices is negative. How is that possible? Right. So understand the logic behind this. So whenever the GDP growth rate is negative for 2 consecutive quarters, this is called as recession. This is called as recession. It is there very often in the newspaper. Please be very careful. For example, back in 2021, India experienced a recession. Eurozone is experiencing recession now. Right? Germany is experiencing recession. Right? So now please tell me, because of capitalism, can there be business cycles? Let me know. Last question to all of you. Because of capitalism, can there be business cycles? That is, right, economy will increase, GDP will increase in certain years, GDP will fall down in certain years, again increase, again fall down. If you ask me, sir, how capitalism will have an impact here? My dear, when the GDP is falling down, what is the demand for goods and services? When the GDP is, right, or let's say economy is experiencing recession, what is the demand? Demand is lesser. And if the demand is lesser, private sector investment will also become low. And if the private sector investment becomes low, can it lead to vicious cycle? Let me know. Can it lead to vicious cycle? And because of vicious cycle, can the economy fall into recession? Of course, yes. Can the economy fall into recession? Of course, yes. Right? And that is the precise reason. Please remember now. Please remember now. Right? Between government and private sector, whenever there's a vicious cycle, who do you think will invest in the economy? Last question. After this, promise will stop. Okay? Between the government as well as the private sector in the vicious cycle, or let's say during recession, who do you think will invest in the economy? It has to be done by the government. Private sector doesn't invest, government will invest. And the logic is simple. Government wants to promote recovery. Otherwise, recession will become depression. Right? That is, if recession continues for a longer duration, it is called as depression. Whenever recession will get continuously happening in the economy, when recession continues for 3 years or more, it is called as depression. Depression is very bad. The last time we experienced a depression was in 1929 and 30. After that, we have not experienced a depression. Very often, we'll experience a recession. Done? Any problem with anything that I've discussed? Please do let me know. Right? Let me answer your questions and then we'll stop the discussion. Okay? India earns a higher amount of remittances and yet GNP or GNI is smaller than GDP. Why? Because you are talking only about remittances. What about profit earned by foreign companies in India? You are talking only about remittances coming into India. What about profits? What about other types of investments? That is the reason NFIA for India becomes generally negative. Okay. Sir, if we buy a fixed capital in 2013 and then replace in 2023 and incur certain cost, will depreciation be subtracted only from 2023 but wear and tear has been caused in each year, so it could be divided by 10 and subtracted from each year? No, my dear. Generally, the argument is depreciation. Again, you're talking about the basic concept of how do you account for depreciation, right? Whether there is right, a continuous accounting, right? There are two different types of methods for accounting for depreciation. That's the reason I'm saying do not worry about all of that. Depreciation simply means in 1 year we'll throw away a machine, purchase a new machine. That is called as depreciation. In case of national accounting, we will deduct that. More than sufficient, don't worry. If anybody has to go for office, please leave. I'm not going to discuss any new concepts now. What flaws does NNP factor cost has? That's the reason I told you, no, compared to GDP as well as NNP, we can use NNP. NNP is the purest form. But the problem is the taxes will vary from one country to another country. Right? That is a precise reason. Subsidies will vary. Right? Various investments will keep on coming in, going out. That's a precise reason. Rather than using NNP at factor cost, we will use right the GDP itself across the globe. Can NNP be negative? You tell me. Can it become negative? How? You tell me. How are you envisaging NNP being negative? You tell me. Let me know how GVA will help in avoiding double counting, my dear. In GVA, you are subtracting the value of intermediary good. You are subtracting the value of intermediary good. So thereby you are eliminating the value of intermediary good being counted in multiple places. That is how GVA will help in avoiding double counting. Okay. Okay. What is the limitations in the measurement of NI? Right. I've told you this, right? If I'm not discussed, we'll discuss that tomorrow again. Don't worry. Why the per capita income issues is not shown in GDP or in NNP report? You know the concept now, right? They cannot keep on writing everything whenever they publish a report. You know the concept. So when you read NNP, right, read it with a pinch of salt. When you read about GDP, read it with a pinch of salt. That's it. Does it mean that in socialism there will be no business cycle? In socialism, where government controls everything, right? In socialism, where government controls everything, generally we will not find this kind of a business cycle. Why? Government is already there in the system. Government keeps on taking care of right, the investment all the time. Okay. Confused between basic price and market prices, then simply buy at the formula. My recommendation is, if you're confused even after discussing so much, don't waste your time. Simply buy at the formula. Okay. Okay, done then. We'll stop the discussion today here. Tomorrow we'll continue. Okay, tomorrow we will continue with this slide itself. Pro and counter cyclical policy. Let me take certain more discussion on this and what is the importance of the policies. Then this will be end of the chapter. Right, tomorrow after this, right, we'll start with inflation chapter. Okay, take care. See you tomorrow sharp at 6 a.m. again. Take care. Have a great day.